Well, good evening, ladies and gentlemen, and thank you very much for being with me this evening. It's good morning to our friends on the east coast of Australia. Good afternoon to our friends across the ditch, across the Tasman, and hello to everyone else as well. Good to have you all with us. Gregory Palladini from California is with us. Hello, Greg. Hope you're having an interesting day. Anthony D.'s with us. Joel, who is from Vero Beach, is with us. Louis is with us. Mike's with us. Yeah, of course. Mark L's with us. Wouldn't be a party without him. And that means that Mike's not far behind. He's there with us. And Miles, of course. Milton, very great pleasure to have you with us. And let me get my glasses to work a little bit better here. Lots of people coming in a little bit late. There we are. Okay, Toddy T down in California, Southern California. Great to have you with us, Toddy. Been years since we've had a chance to be together. And I guess we'll have to fix that. It's well and truly time for me to make a trip to the States. Mario's with us. He's from California as well. He's a new tutorial guy doing his tutorial with us at the moment. And George is with us. Mike's with us. Yes, thank you. Yeah, Peter, good to see you too. Oh, and Peter Mack, of course, who is not a day trader. Plenty of others. Okay, grand to have you all with us, folks. And let's get started. So here we are today. I'm going to do. Oh, somebody please type into the question box, would you, if you can hear me all right. Just make sure that the volume's carrying everywhere for you. Nobody? Yes, here we go. Good on you. Oh, Mark, of course, first, and Noel. Thank you, guys. That's wonderful. Okay, let's move on. Here we are. We know that markets are rational, orderly, and sometimes predictable. And the Danielcode is a set of proprietary ratios that control time and price in all markets. Now, recently, I've been talking to you about some fairly sophisticated strategies, particularly of time, and it's been quite amazing what we've been finding. And if you have missed out on it, remember that our webinars are all posted on the website, www.thedanielcode.com, and on YouTube. And there's well over 100 of them by now. You can go and review all of those at your leisure. Today, I want to talk to you about something that appears to be very basic, but it's actually at the crux of all trading. And it's something that I keep talking to you about, and I'm not sure if I'm making it explicitly clear what I mean. So today, one of the things we're talking about is time and price being squared. That's not an original expression. The great WD Gann invented the time and price squared quote. What he meant by that, and this screen that you're looking at the moment is a Gann chart that all of this used to be done when I was a Gann trader, which I was for 12 years. Used to do all these charts by hand on graph paper. All those little tiny boxes all lined up on the page. And the most basic angle was a 1 by 1. And that's in fact a 45-degree angle. It doesn't quite look 45 degrees on this chart, but it gets distorted with electronic chart. But 1 by 1 is a line that Gann created that went up 1 bar and across 1 bar for each point. In other words, it was an line that was at 45-degree angle. And then he had his other angles. He had 3 by 1s, 8 by 1s, and the other side of the downside, 1 by 3s, 1 by 8s, etc. But they're interesting, as you can see from this chart. Everything's interesting, but they're not very precise. And they're sort of a bit like the indicators that stocks guys like to use. 50-day moving average, 100-day moving average, 200-day moving average. They're not very precise, but they're a convention that people understand what you're talking about. But they're really no help at all to your trading because they don't actually tell you anything, unlike what we're going to talk to you about today, which is the basis of all market movement. So that was Gann's expression of time and price squared. And of course, Gann was a Freemason. He was very committed to the Freemasonry movement, and he actually was awarded the 33rd degree of the Old Scottish Rite for his services over his many, many years to Freemasonry. Talking about the square and the square of 9 and the square of all those other numbers, that came pretty naturally to Gann because squares are a big deal in Freemasonry, and his angles are derivations of that. And we use angles. We use angles for our 4th and 5th seal analysis. And if you were with us at our last webinar, you probably got indigestion thinking about angles. We had so many angles to show you, but that's all the interesting stuff. But Danielcode creates time cycles. Those of you who've done a tutorial know that when we create all of the numbers from the Danielcode, they're all time cycles. Daniel's code is only about time cycles. And we actually use those exact time cycles as price targets. And today what I want to talk to you about is this amazing synergy between time and price and what knowledge of these price targets can do for your trading. In fact, I'm not putting it too high if I said to you, forget everything you think you know about trading. Don't care whether you're trading Elliott Wave or Murray Meth or anything else, any other system or Danielcode. Doesn't matter. If you did just one thing, if you look for Danielcode support, precisely as I define Danielcode support, which is within 0.1% of wherever that price number is, not 1%, 0.1%, 1/10 of 1%. It's a pretty tight target, and it's actually very, very hard for markets to find those targets. And it's hard because they don't know anything about it. The rest of the world doesn't know anything about Danielcode time cycles, which we use as price targets. And for a market to find our Danielcode price cycles, price targets, I should say, it's very hard because the mob is not with them. The rest of the world doesn't know about them. They're not Fibonacci ratios. They're not old highs and old lows. They're not 100-day moving average. They're none of those things. They stand completely on their own. They're not on the shoulders of any other methodology you've ever seen or heard about. So Danielcode numbers are really far left field, if you like, to the mainstream. And it's the mainstream that's parking these markets day after day and night after night. And when they find the Danielcode numbers with that level of exactitude which I require, it really means a whole lot. And if you knew nothing else except the Danielcode numbers, and you bought the high of a bar when you found support of the low, and you sold the low of a bar when you find support of the high, I guarantee you do better than 90% of people who trade. It's that basic, it's that simple, but it's also that sophisticated. And that's what I'm going to talk to you about today. Let's move on. Incidentally, I've had a dose of the flu, so if I'm a little bit stuffed up today, folks, I ask you to forgive me. I've had a dreadful 7 or 8 days of the flu. It's been awful, but it's getting better now. So look at this. This is where you start with. This is the Aussie US dollar chart. Now, it just happened to be the first one on the list, which is why you're seeing it. But Forex and futures work exactly the same. I know the Forex guys are always trying to differentiate themselves, and they call the smallest move a market can make a pip instead of a tick. And other ideas like that. But in reality, Forex and futures trades exactly the same on the Danielcode. So forget that you're looking at a Forex chart, pretend it's a futures chart, it's exactly the same thing. So that's what you look at when you start your analysis. All you do is you get some price bars. But those price bars are also time bars, because on every chart we've got two axes, and I'm always confused about which one is which. But I think the x-axis is the one that runs along the bottom, and that's actually time. As those bars move across, they're going through time. And the other one, the y-axis, is the price pane on the right of the chart, the hard right border where markets go to die. And this is just a completely naked chart. That's what you start off with. So have a look at what happened here up the February the 2nd, 2023 at that high. Those bars around the high, that matrix of the high, provide us with our first set of numbers. And they're the Danielcode blue lines. They are extensions of the range. The red and black lines that you see on members' charts are retracements of the range. And blue lines are extensions of the range. And that just goes on straight away, bang, and there it is. So what's that? What's that telling us? That's showing the initial support on this market. Have a look what happens as we move along. You can see the very first blue line. The market runs through that from its, this is a daily chart. The market runs straight through that from its February 2nd high, but it rallies pretty hard on that big bar down, and the close tries to find the blue line number, and it doesn't quite get there, but it's tried really hard. It's very close. And then it has another 4 or 5 bars, little correction, and that correction hits the blue line exactly. That's telling us that these blue lines are activated. Markets are actually talking to you all the time. The problem is, until we had the Danielcode, we didn't have the language to understand what they're saying. Now we do, and you can see this here, what that market is saying the first time it hits the blue line. It's activating the blue line, and it's saying to us, I know these numbers and I'm tracking them. The market moves down a little bit. It doesn't give any target recognition to the next number down. Then we get down to the third number, and on the close of the bar down, where I've got an arrow saying validates the blue line, the close of that bar is almost exactly on the blue line. And then it continues on a bit further, and we get where I've said more validation. That low gets stopped exactly on the blue line, and 2 bars later you get a retest of exactly the same number. Then we get some sideways movement, a bit of rallying, a half-hearted attempt to get support off that same number, which is 65, 67, rallies up, and it finds resistance at what was previously support, but it was not identified. This is the bar at 68.23, the high bar you can see there, almost exactly at that 68.23 blue line, which the market ignored on its way down. It fluttered around a bit, but it couldn't find that number. But look here, it found it almost perfectly on the rally to that high. Then the market starts to go down again, and eventually it gets Danielcode support at 65.01. What's the low of that bar? I'd like to know. I might even have it right here. It's very, very precise. It's always very, very precise. And the low of that bar is 64.99. Okay, I'm not making it up. That's 2 ticks variance. That's not even a human hair. That's perfect target recognition with a variance of 2 ticks, which is like nothing. We allow 0.1%. So we'd be allowing 6.5 ticks variance. We've got target recognition within 2 ticks. Just about perfect, isn't it? Next bar, the market pokes itself through that bar at 65.01. Little rally for a couple of bars, goes down again. And at that low bar, where I've put a note on it, the close is 65.02. 85.04. Sorry, yeah, I've got 85. Bit of dyslexic coming in there. You have to exclude me, folks. I start doing these webinars for you at about 3 or 4 o'clock in the morning, and sometimes a little slip of the finger comes in. It's not, that close is not 85.04. The close of that bar is actually 65.04. As I said. So there was your number at 65.01. The close within 3 ticks of that number, that's target recognition. Target recognition means a whole lot. In this case, it sets up the buy signal, and we have a TO3 and a blue line buy signal. The blue line is the strongest signal that the program generates, and the TO3 are our normal reversal signals. So today, nice trade up, was good to be on it. Let's have a look now with these blue lines, just really simply. It's just one simple click of the mouse to create them. And these are the Danielcode blue lines, which same as we've just been looking at. But let's now add some time cycles. When I tell you that these markets, these numbers create or control all markets in time and price, we've been looking at price. Now let's start putting some time signals on. So from that bar that first activated the blue line, we know that's tracking the chart. So I'm going to start our count, our time count from there. And what we get, if you look at the 44 line, that's a high. Then the next number is 59. That's the big rally up into the eventual high, which comes exactly on our 62 bar. So that's a traditional way of looking at time and price, but there's nothing traditional about it, as I say, because these Danielcode ratios are unknown to the greater world. They're known only to Danielcode folks. And we're a very, very small business. The vast majority out there don't know anything about this. So then I've moved it on, the same time cycles. These are our most common time cycles. They're not the only time cycles. Those of you who've been following me with the recent webinars this year, you've seen all of the time cycles working. But the most common time cycles are 44, 59, 62, and 70, which is a Danielcode number. Now, 70 doesn't appear in our group of retracements. It acts purely as a time cycle, but it's pretty deadly when it hits, and this is a tool you'll get if you're subscribed to our DC website Pro subscription level. Anyway, I've just moved that now to the next time we had a contact with the blue line, and starting that count there. Now you've got the low accurate to 1 day. All of these time cycles are accurate to plus or minus 1 period. So we've got that low right there. We've got a bit of movement for the minor low through the small consolidation before the low, and we can move on and find when we go to our next bars for validation, there's 2 of them that are hitting right on that blue line, and I mean almost exactly on that blue line. That line is at 65, 67, and these lines are at, let me see if I can find them, they're not on here, 65, no, I'm on a different chart, excuse me. There are 2 lines there, both of them have tested the red line, the blue lines at 65, 67. If we start our time cycle count on the first of those 2 bars, notice what we're doing consistently. We're simply starting our time counts from when we have a validation of the blue line price numbers. So we can put that on there, and that gives us 1 bar before the high at the 44 cycle, and it gives us 1 bar before the low on the 59 cycle. What happens if we simply move our time cycle to the second one of those bars that test the blue line at 65, 67? There you are. The 59 is actually today's bar. This went on before today's bar came out, but that's actually today's bar for which we had a TO3 buy signal. And you can see this is actually the members' charts. This is what they look like. And you can go to these every day. They're updated on weekends and on Wednesday evening after markets close, and more often if necessary when we get really big volatile moves that run through the numbers that I show you. All the rest of the numbers are actually on the charts. I just have to scan them up a bit, scale them up or down, and we will update them sometimes every day if that's what's required. But you can see this was the members chart. There's the low bar, which was Wednesday, and that low was 64.58. There's your blue line number, folks, 64.59, and that was posted on Wednesday, as you would know. So that is just so accurate to be amazing. And of course, that setup, that target recognition, is the first thing that sets up the TO3 buy signals, the blue line signals, all of them. The first condition you need before you'll get a turn is Danielcode target recognition. If you don't get it, the probability of getting a turn is down in single digits. Remember, everything we do with trading is about probabilities. There are no certainties, but some of these probabilities get very, very high. And the probabilities of a turn after Danielcode target recognition are very, very high, and it's even higher to talk about the opposite of that. If you do not have target recognition, it's extremely unlikely that you get a turn. The probabilities of that happening are in the low single digits. And just to show how much it knows what it's doing, this market, there's the buy signal. The buy signal's elected, off it goes. And at today's close, the market is sitting at 65.73. Okay, why is it sitting there? Well, look at the red line at 65.70. It's 3 ticks away. Remember, we would allow 6 ticks as variance, would be 0.1%. The close is 3 ticks away, and target recognition is valid on the bar high low or on the close. We'll often see target recognition on the close. And I repeat, it's really hard for markets to do this because nobody else knows these numbers. No one else is helping them. No one's saying we're going to park it at some Fibonacci number or something else. It's not. It doesn't work. Those are only approximates. Danielcode is accurate, and it's accurate to 0.1%. And it's so important if you understand that. Then everything flows from that. Here is Euro US dollar. I'm going to go through a few of the Forex trades today that we've had, and it's the same thing. We're looking for the setup from Wednesday's bar. The low of that bar is 106.350. Where's your Danielcode number? 106.399. Okay, a handful of ticks away. Target recognition, that's what sets up the TO3 buy signal, which was elected, and up it goes. This is the Japanese yen British pound pair today, and I want to just reinforce something for you. We had on Tuesday, we had a TO3 and a blue line sell signal, pretty strong stuff. We got a really weak bar down that just went to the first retracement basically and rallied back up, and today we got a rally up almost to the high. Remember that these Danielcode trade signals are so powerful that if they fail, it's telling you you're wrong and you need to do something about it. And what you need to do about it is get in the other way. So that's what gives us the flip me signals, and I put a line on there to show you where the flip me buy is. And if this market breaches that buy within 3 days after electing the trade, and we're only on day 1 so far, Friday will be day 2, then you're wrong. You need to do something about it, and what you need to do is get long. And that's why it's called Flip Me. I've talked to you about this periodically. I haven't been able to get this into a program yet, but Terry tells me that he's about ready to do it. I hope I haven't libeled you there, Terry, but we'll have to get onto that. So be aware of that. You not only get the signal, if it fails, that's telling you there's another trade the other way. In other words, this market is continually reacting to its Danielcode ratios. This is the British pound, US dollar cable. And I posted this chart to show you how this thing's been setting up, that we had almost perfect target recognition 2 days ago, and the high of that bar that was on Tuesday was 12447. 12447. You can see the red line there at 12448. That's one tick, singular, one tick variance. It's not a number that's known to the world at large. How did the market manage to stop at that number? Because Danielcode support and resistance controls all markets. What happened from there? Well, inside bar, a retest of that high. Look where the inside bar found support, cheeky thing, found support right at the just above the red line retracement, which was at 12344. That low was at 12442. Reading the wrong line, 12348. Forgive me, 4 ticks variance. That's all. Whoosho, up she goes today. Look where this market closed today. This close is at 1.2526. Have a look at the blue line that it's found, 1.2529. Think about what it's had to do to get to that number. It's had to open, get momentum, roar up, go through the number, and then say, oops, sorry, I've missed the number, I'm going to go and find it. And I'm not kidding. There's that number, 1.2526. There was the blue line, 1.2529. The market went through that number and then struggled and worked and fought to close right on that line. So it's telling you that it's at target recognition. This market is saying to you, I know these numbers and I'm tracking them. And I know you think that sounds absurd, what's Needham been smoking, but that's the reality. That's actually what happens with markets. All the time. How often? Yeah, every day. Keep looking at it. That's we finished with that. That's cable. I hope I've only moved you along one. I don't want to miss anything. Yes, I have. Here we are. This is the Kiwi. Same story. Have a look at this. Market's been going down. Been some volatility. It's had a big push down from the high here. Big, massive bar was a bit of excitement for our friends across the ditch. And for me, because I was trading it, and you had 2 big bars down. You had the high back in May the 11th, and then the second bar from that high, big bar down, about a 7 or 8 day rally, and an even bigger bar pushing down. What have you got down here at this low? Well, the low of this bar on Wednesday is at 59.85. Where's our blue line? You can't see it there because it comes from it's on the other side of the sheet, but I can tell you it was 59.84. 1 tick variance. There's your test. That's what set up the TO3 and blue line buy signal, target recognition. The first condition that's required to get a turn in any market is Danielcode target recognition. And I sound like a cracked record. It is so simple for you to do this, folks. You just have to go to the Danielcode website, click on members charts, and they're there sitting at you. Put on the blue numbers. There's a tool to do that with. Then if you are subscribed to the Danielcode website Pro, you'll have the tool that creates the red and black lines. If not, you can read them there. Just put them on the chart. See what the market does when it gets to that number, because it's this target recognition. I can say almost fully confidently you don't get a turn without Danielcode target recognition. So if I sound like I'm playing a broken record, I am, but this is so simple. once you know how to do it. And it's so important. You will improve your trading out of sight. If you do nothing else but use this as a final filter, whenever you think you've got a trade worked out, use as a final filter, have I got Danielcode target recognition? And remember, that target recognition can last for 2 days, sometimes 3 days, but without that target recognition, you just don't get a turn. So there was the TO3 and blue line buy signal for the Kiwi today, and off it went. Have a look at this. This is another version of Flip Me, and again, I tell you, it's very, very important. 2 days ago, dollar CAD, 2 days ago, we had a buy signal, and that was on Tuesday's bar for Wednesday's trading. Well, you can see what Wednesday did. The trade got elected, up it went, turned around, dived back. The setup bar for Tuesday, the low of that bar was 13567. Which means that the failure point is at 13665. I put it on there. Okay, 2 ticks below the low of the setup bar. If that's taken out within 3 days, that's a Flip Me signal, and it was. It was taken out. You see the first day it got elected, then you start the count up as soon as it's elected. Bar number 1, whoosh, down. Nice big bar, $870 odd per one contract. Simply for knowing about Flip Me. Where do you learn about Flip Me? Danielcode webinars. They're all there and they're free. You can go through all of my webinars. You'll see I've talked about this again and again and again. It's very, very potent because it's got the world is on the wrong side of the trade, and that's why it's so good. When markets give surprises to the mainstream, that's when you get the big moves. And that was the loonie. Dollar Canadian dollar, US dollar Canadian dollar, called the loonie, and it had a nice, really big trade for us today. Okay, this is the dollar yen, and I just wanted to point out to you exactly the same thing. You can see how this market's gone up to find its high, and on, I think it was Friday, the high of that bar was at 147.11. 147.11, and the close of that bar is at 145.93. And you can see the blue line at 146.38. That's target recognition. And then what happens? Little upside down bar, little key reversal bar. Pretty clear what it's going to do, and it does. Straight down, 1, 2, 3 bars down. The second bar down, the low is 139.233. Where's our Danielcode number? 139.181. About 35 pips variance. That's target recognition for this market. What about the next bar? What about what it did today? Well, it charges down. It's looking for 138.334. It doesn't get there, but look what it does. It runs all the way back to close at 138.791. Why has it done that? Because after that red line number, 138.805, about 12 ticks variance, the market is saying to you, I know these numbers and I'm tracking them. And as I say again, it's really hard for the market to do that because those are not Fibonacci ratios. They're not old highs or old lows. They're not moving averages of anything. They're straight out Danielcode ratios, which you know. Okay, so if you would like to learn to do all this stuff for yourself, I'd be delighted to teach you. And we've got a couple of vacancies early in this month. If you're in a position to do your Danielcode tutorial and get started before the 14th of the month, I will be happy to throw in our new program, Creating and Knowing Danielcode Time Cycles, which will retail for $4,500, but it's free if you're in the first 3 people to take the Danielcode training tutorial before 14 June. So if you're ready for do a tutorial, do it now, get the benefit of that. It's been pretty amazing stuff. It is wild, the time cycles. Okay, so let's think a little bit more about turns. All trends start and end with a turn, which is why we are obsessed with turns. By definition, turns are against the apparent trend, so they have a higher probability of failing. For those of you who've done Danielcode tutorials, you'll understand that and know that's why we have different stop loss protocols if we're taking a trade against the apparent trend or with the apparent trend. So flip me signals, which are automatic continuation signals, are vital for your trading. That happens all the time. And that's lock in your flip me signals. They're your continuity trading signal, and you'll just be flowing with markets. So remember, all the Danielcode price levels shown as red and black lines, they're retracements of an operating range, and there may be more than one operating range. And the blue lines are extensions of the range. And of course, they're time cycles. I talk a lot of these webinars about target recognition. And you know what I mean by that. Target recognition happens at a bar high low or on the close. Both are valid, and it must be within 0.1% of the price level for that particular market at that time. In other words, as markets move up, the allowable range gets a little bit bigger. As they move down, the allowable range gets a little bit smaller. But at 0.1%, 1/10 of 1% to have target recognition, it's really hard for markets to do that because they're doing it on their own without support from the great trading population out there who are looking for, God knows what they're looking for, some Fibonacci extension probably. It's really hard for markets to do that. They've got to, Danielcode markets will find those numbers all the time at the high or the low or the close. Both are valid. And it's not easy. It's really, really hard for it to do that. And it's very, very impressive. Okay, stand by a moment. Here we are. Who have we got? Oh, Greg. This is Greg Palladini, so this is important. It's a, he says it's a flippant excellent strategy. Would be based on the 44, 59, 62, and 70 cycles on the members' charts like shown in the fourth seal. May help, especially those new DC members, better identify turns. Yeah, I can do that. That's a really good suggestion, Greg. Thank you. Greg is a very, very good trader. He's also a wealth fund manager. He's done 2 Danielcode tutorials. He's been a member since 2015. He came back to do his second Danielcode tutorial a couple of years ago. Seems like yesterday. It's a bit longer than that, to find out about trading time, and he's become an absolute master of it. And if you'd like to know more about Greg and his trading, go to forum at the Danielcode website, and you'll see a post by Greg Palladini, and it's called Danielcode Training, I think. And he sets out his experiences as he went through the tutorial, which has just been hugely valuable to everyone. And folks, if you're not a Danielcode member, you can have a free trial. Go to forum and read Greg Palladini's posts as he goes through the process of learning about trading Danielcode time. Pretty extraordinary. So this is T-bonds, which are very important. And of course, at the moment, they're going the same way as the equities. You heard me say that the Fed really wants this market to be going down. The traders who are still bulls, they haven't got rid of that bullish feeling, despite the market having been down for over a year. The nature of this market is very, very bullish. And what the Nasdaq's doing on its latest bit of excitement about artificial intelligence, I mean, it's in a world of its own. But essentially, this market is still feeling bullish. And for that to be supported, you need T-bonds going up, which means price going down. That's the trader's version. The opposite way, it going continuing down, which is price going return interest rates going up. That's the Fed's version of it. And there's a battle between the two. Have a look at this chart. Excuse me. We've got this is the June daily chart, and we had that nice setup at a 126 correct 6. From there, this is the next chart, and this is the new contract. This chart's a members chart that was posted on the 27th of May, and that would roll over into the September contract for UST bonds. And the note at the top is what I posted that day. It said, this is the September contract, which became the front month on Friday. That was posted on May the 27th. We sometimes get smart guys making comments that, oh, well, if you put enough numbers on the chart, it's sure to find one of them. That's simply not true. But the reality is, the reason we get a lot of numbers on a chart is when it has a very long extended move, because every counter trend, particularly every complex counter trend, creates its new DC ratios. So this is straight out of a new contract on rollover. And have a look, you can see the first of the blue lines came in at 125 correct 24. And on that day, here we are, the close of that bar was 125 correct 24. That little arrowhead you can see in the numbers is called a correct. And the blue line, the last down bar, closed on this chart, closed exactly at 125.24. That's target recognition. And you can see, because this is the first chart from the new contract, there's relatively few numbers on it. You've got one blue line to 125.24, then you've got nothing till 124.23. You've got a whole number, 32, in fact, this case 31 ticks between those two lines. But the market finds these numbers, and it does this all the time. Okay, that close was right on that number exactly. And this is what happened. You had your key reversal bar, and you had target recognition. It's almost inevitable that the market's going to rally, which it's done. And it's now up 3 days. And we're long that market on 6S, and it's made about $1,200 or $1,400 in the last few days. Might have made more than that. I can't see my notes there. What did I say about it? Yeah, 1,200. I think it's made more than that. But there you are, so simple, you see, folks, but exactly the same. If you knew that blue line, if you looked at the members' charts and said, I'll put that blue line on my chart, wow, the close is right on that number. That's target recognition. Just really simply, if you can find exact Danielcode support at the lows, start thinking that you should be buying the high. Once we get target recognition, we don't get all excited and say, we're going to buy this market right here. That would be hubris, and hubris is the death of all traders. Instant death, incarceration or worse. What we say is, we believe on our analysis, on the Danielcode analysis and the finding of target recognition, we believe this market is ripe for a turn. If the market agrees with us, it's going to show us, and it will show us by taking out the high of the previous bar. And that's what gets us into the trade, and that's where the buy signals are. And if you go to the Danielcode website, you'll see it shows you exactly where to enter and where to put your initial stop. So that's T-bonds. Have a look at this. This is the US dollar index, and for those of you who are looking for the ICE charts in 6S, there's end of day data, but there's no intraday data for any of the ICE futures. I've spoken to Trade Navigator about it several times. We have no clarity about it. They've got themselves in a terrible mess with one of their data providers who took away or cancelled their API. They've been rebuilding everything from scratch. It's been a massive job, but we still don't have intraday data for the ICE futures, which is a great shame because coffee and sugar are great trading markets. We love them. And What's our other one? Coffee and sugar. Oh, of course. This, the US dollar index, is on ICE exchange. Have a look at this chart. This is your members chart. And I put a heading on there to show you you've had target recognition on the way up. And we've got two bars next to each other that have found target recognition at two different numbers. The first one caused the outside day, the market corrected back down to find support. Up it goes again. You've got your second lot of target recognition, then an inside bar that stops almost exactly at the 104.245 black line. And next you've got an outside bar that breaks through the 104.25 black line but closes below it. Remember, with these black lines, they have a dual quality. They act exactly the same as support and resistance as the red lines, but with one thing added. If you get a close in this chart, if you have a daily close above that black line at 104.245, the close above that black line, that makes the probabilities massively in favor that the swing is going to be taken out. And when I say massively, it's 90+% probability. On daily charts, that's not so significant, but those of you who follow us regularly and consistently will remember sometime maybe a couple of years ago, we had this same black line set up on a 6-day chart. It might have even been a 12-day chart. And I said, if we get a close above that number, it's probably going to take out the swing high, which it did, made a new all-time highs. And that trade was worth about $34,000 per one contract, as I remember it. So very important, look at those black lines. A close the other side of the black line implies the swing will be taken out. Look at this bar, this contract here. 1, 2, 3, 4 days, including today now. That's 5 days, not including today, I should say. It's been fighting to go up. All of its closes are below the black line. It has not been able to breach the black line on a closing basis. And what markets do on the close is very, very important. But on its high, it's been pretty much like clockwork for Danielcode numbers. You can see that high that we got on Wednesday was at 104.615. And where was our number there? 104.635, and this market moves in 5 ticks at a time. That's about 6 ticks variance. Pretty fantastic, isn't it? There was your setup. That's your target recognition. That sets up the trade. So for today, naturally, we had a TO3 and a blue line sell signal. Down it went. Look at that. Easy as pie. Interesting. It's all over with that move for the day. However, look what it does on the close. The close of this big bar down today is 103.480. Why did it do that? Well, the red line's at 103.470, and that's just 2 ticks variance. This thing moves in 5s. That's 2 ticks variance. This market is saying to you, it's talking to you if you're listening, it's saying, I know these Danielcode numbers and I'm tracking them. Watch what it does in the future. I mean, it's amazing to see this stuff. People think I'm nuts. I'm talking to charts all bloody day and half the night. I'm thrilled to see what these markets do, and they've been doing it forever. Way back in the day, and I mean way back in the day, I analyzed the Dow back until about 1924. Exactly the same thing happened all the time, all the time, all the time. So bear in mind, markets are trying to talk to you. Markets are your friend. That's what makes you rich. You just have to listen to what they're telling you. I know that sounds nuts. I promise you it's not. Okay, let's keep doing it. Here's crude oil. Okay, so it's been a bit of a struggle deciding what it wanted to do. Had a few big bars down. Look what happens. You get Danielcode target recognition all the way down. The first big bar down, which was Tuesday. The low of that bar, 69.02. Where's our blue line? 69.07. That's 5 ticks variance. That's nothing. That's not even the width of a human hair. That's target recognition. The very next bar gets very sloppy around where it is, but we've already had target recognition. This is, I'm showing you how we get target recognition for 2 days. We had target recognition on the Tuesday. That is valid for the Wednesday. It still sets up the TO3 buy signal, even though we don't have target recognition on the Wednesday signal. We've already got it. That's all we needed. Put your buy order on. 2 ticks above the high, up it goes. Easy enough. What about this? Copper. This is what copper looked like on Wednesday night. Beautiful target recognition everywhere. Not generally thought of as the most friendly target market, copper, but it is. All the way back on Monday, May the 24th, the close of that bar was 365. I'm dyslexic. Excuse me. 356. $.15, 356.15. Where's the Danielcode blue line? 356.10. That's what sets up, that's target recognition. That sets up the buy signal. Up it goes for a couple of days, and what it does up there on its high just before it does a key reversal bar is the high of that bar is 368.45. Where's our red line, folks? 368.40. 5 ticks variance. Wow. This thing moved in 5 ticks at a go. That's 1 tick. That's 1 tick variance. Key reversal bar the next day. Down it goes. What does it do on its leg down? The close of that bar going down is at 363.70. Where's our red line? 363.85. That's 3 ticks variance. That's target recognition. Put your buy order on, 2 ticks above the high. Whoosh, off she goes. Easy enough, simple enough. This thing is still marching to all of the Danielcode numbers. Today's high came in at 373.15. Where's our red line up there? 372.95, about 25 divided by 5, say 5, 6, 7 ticks difference. Variance. And that was also a flip me signal because we had a sell. And if the sell fails, the number it will fail at is the original stop loss position, 369, add 2 ticks, that's your flip me position as well. You're long, and it's looking good. Have a look at the Russell. Now I'm boring you. Let me just make the point. This happens in all markets, in all time frames. We're not cherry picking markets. You can see the big bar down on Wednesday. Its low was at 1738.5. Where's our red line? 1737.8. 8 ticks variance is nothing. Not even the left thickness of a human hair. What happens today? Buy signal rallies up. It's very weak, and the S&P wasn't a whole lot better. NASDAQ was the star, but this thing is really struggling. But you had your buy signal there, as you can see, and it was elected. And Friday is the most bullish day of the week. It might rally a little bit more, but it was a very weak move up. Very weak indeed, let me tell you. But look, everything perfect. What does it do with this move up today? The high is at 1777.2. The flip me signal's at 1778, and it didn't pick it. It didn't get there. 2 ticks, it didn't want to go there. There's a reason. Okay, so I think we're nearly up to date, folks. This is soybeans. Have a look at this. We've got Danielcode target recognition on the big push down. And then we got this key reversal bar with the low. The low is at 1270 correct 6. The blue line's at 12. The low is what I'm talking about here. The low was 1270 correct 6. Where's our blue line? 1269.0. That's 7 ticks variance. Okay, that's right at the limit. In fact, that's 1 tick over the limit. Am I going to can it because it's gone 1 tick over the limit? Look, The whole world doesn't know about this. Very, very few people know about this. When I tell you we're a small business, we're a very small business. The only people who know this stuff are Danielcode folks. We can't expect the rest of the world to never have a fat finger. And they've turned it up one tick too soon, according to the numbers, but that's fine. I put out a TO3 buy signal for it anyway, a TO3 plus signal. What happened with that today? There it is. I've gone past it too many. This is soybeans you're looking at here. Nice big bar up today. We're long. And what has this bar got to tell us? It never stops talking to us. Have a look at the high of this bar. 1335 correct 2 is the black line on the retracement. 1335 correct 0. That's one tick variance. One. Okay, it's amazing stuff. It's amazing stuff. And the number's 1335. That means there's 13,350 ticks at that number. Danielcode found it with one tick variance. Okay, that's near the end of the party, folks. This is silver. Just wanted to show you the same thing. Danielcode target recognition on the big bar down. This is what sets up the buys in this market. And it's very, very precise. You can see there are two blue lines there. And what this little beauty did on Thursday, its low is at 2280 against the blue line at 2278.5, and its close was 2291 against the blue line of 2289.5. And if you can't work out how amazingly exact all of that is, just have a look at what happens today. There's the buy signal. It had a little bar down, then rallied 2 days up. Have a look at today's high. Today's high, 2403.0. Where's your Danielcode black line? 2403. The market is talking to you, and what it's saying to you is, I know these numbers and I'm tracking them. And we expect to see the markets track these numbers at least once every third bar. And if it doesn't, we know we're using the wrong sequence. Okay? But this is on the right sequence. 2403, the high, a couple of ticks off it, 2403.0. In fact, try zero variance exactly at that number. Amazing stuff, isn't it? The Danielcode black line. Wonderful stuff. Okay. So I think I wanted to just highlight for you, folks, I don't tell you this stuff without proof. If you're interested in this stuff, please go to the Danielcode website and you'll see there in the gold writing, 3 lines from the bottom, it says Chart Archives. Click on that link and you'll find every member's chart I've created since this business went public in late 2007. There's over 40,000 charts there. You will be hard-pressed to find any chart that's turned anywhere except at its Danielcode numbers. And if that doesn't convince you to get yourselves to subscribe to the members' charts at least, and be putting those numbers on your charts, if that doesn't convince you to do that, then there's no hope. Over 40,000 charts, all prepared by me, all in real time. Okay, so that's us for today, folks. I've not too bad for time, but remember, the business of trading futures and Forex is not to be right. The business of trading is making money, but following the Danielcode rules and the Danielcode targets, you'll make all the money in the world. If you haven't already, please feel free to take a free trial. If you've already had a free trial, the website will probably remember you and not want to give you another one, but contact Terry at support at the Danielcode, and he will sort all of that out for you. Finally, here's our disclaimer. Do take it seriously, folks. I promise you, it's really, really easy to lose money trading if you don't know what you're doing. In the same breath, let me say it's really, really easy to make money, and a whole lot of it once you do know what you're doing. So get yourself educated. Go to the Danielcode website. Go through all of our webinars. There's over 100 of them there on the website and at YouTube. Read everything that's there. But these webinars are an enormous source of education for you. Start looking for Danielcode numbers at the swing, at the bar high or low or the close. And remember that we always use true highs and true lows. Don't get caught in the gaps. And that's us for tonight. Very good, John. Please look up the New Zealand Manuka honey and garlic. Rolf, exactly right. My wife's been pouring that into me, and it's pretty wonderful. It's magic stuff, that Manuka honey, isn't it? Wonderful. So that's us for today, folks. Thank you for being with us. Akshay, you've arrived late. Good to see you. Anthony DD for you. Bob, Colin, a lot of people came in today, all a little bit late, but that's great. Good to have you here. Colin's doing a tutorial at the moment with his dad. Oh dear, look at all these guys I didn't have a chance to say hello to. We're grand having you all with us, folks. Wonderful. And Tony, you, of course. And Rob, my mate from Rob H, the big H from Auckland. He came in late. He's a very, very clever guy and a super trader. Good having you with us, Rob. Hope you're well, my friend. So take care, folks. I'll be talking to you in another 2 weeks at the next webinar. Anything in particular you want to know about, please feel free to email me. If you're ready to learn how to be a super trader, email me, jneedham@thedanielcode.com, jneedham@thedanielcode.com, and we can teach you everything that's worth knowing about trading. Okay, all the best for now, folks, and bye-bye for now.